We had a pretty nice rally today. Felt it in my growth stocks. CRISPR up 5%. Jumia up a little over 8%. Virgin Galactic up over 20%. It was a good day for the growth stocks. Amazon killing it. New all-time high. So what's the deal here? Yesterday we had that pullback down, but the cases came down as well. So coronavirus news is starting to look pretty good. Even though Anthony Fauci came out today and said, May 1st looking a little too optimistic, probably not going to happen. The fact that he said it's a little too optimistic, it adds some realism to it. It adds some realism to the whole situation that Dr. Fauci is even looking for a day that we could possibly go back to work, possibly begin to turn the economy back on, all that. So the market's rallying a little bit off that additional certainty we're kind of starting to feel, and that we're getting closer to the light at the end of the tunnel. We're looking at it and we're now saying, okay, maybe we're not going to get this May 1st, opening, but that's only 2 weeks away. It's 2 weeks, not the end of the world. We can live a little longer than 2 weeks. We'll see that come through. So things are just starting to feel real again. Starting to feel like we're about to get back to the United States of America. Now that said, I still think the rally feels a little hot for me. I'm not selling. I'm not really changing a whole lot right here. I'm not buying so hard. I'm expecting a pullback. I'm expecting what happened yesterday to probably happen tomorrow on today's rally. It was very aggressive. That said, the fact that cash is flowing into the growth stocks right now is good. Jumia 8%, Virgin Galactic 20%. That's crazy. Not crazy in a bad way, just crazy like it's telling us something. It's telling us people want to put money in growth stocks, which is a good sign. People see the potential for growth. Now, Amazon being a huge success today is interesting. So what's going to happen to the economy? A lot's going to change, right? So a lot of people are now going to things like Amazon. People who weren't Amazon customers are probably becoming more Amazon customers. People who had Amazon Prime, who were using it X period of time, are now using it X+1 periods of time. So a lot more people are ordering online. What's that going to mean for the other retailers? I don't know. I like Walmart. I think Walmart Plus is going to offer a very competitive product to Amazon Prime, and I think Walmart is going to pick up as a stock and is a better deal than Amazon. Amazon's trading at about 80 times earnings. Walmart's trading at something like 20 times earnings. So Walmart on the price to earnings ratio is the better deal. They've got a lot of warehouses all around the country. Most people live within 10 miles of Walmart, whatever that statistic is. So they're in a very good position to facilitate and compete with that same-day delivery that makes Amazon such an attractive stock. So Amazon is not the stock for me, but retail, we've been seeing the death of retail for a long time. It seemed like in the last year or two that was starting to slow down a little bit. It seems like coronavirus is going to pick that up. A lot of guys are just going to fall off the cliff. Kohl's, JCPenney. So put things in perspective. Amazon's at all-time highs. A lot of people are taking that kind of logic I just shelled out. Online ordering becoming more of a thing. You got to get your delivery game and your online game up to the high level. Amazon's the leader in that. Walmart, I believe, will become the best website for that. That said, Amazon's obviously taking a lot of customers. So there's that. Now, let's get into the JP Morgan earnings call. So I'm not going to tell you to buy or sell JP Morgan. I'm going to tell you that the outlook felt negative to me. So the stock didn't really react that way. Opened the morning positive, and then later in the day went solidly negative, and the banks across the board, more so in Wells Fargo, whose earnings call I didn't listen to, but they also reported earnings this morning. It sounds like a lot of businesses just aren't going to be paying their loans on time, and they're going to see some credit losses. Also, credit cards, a lot of people are going to struggle to pay their credit cards. So that kind of gives us some insight into the economy. Debt is something people have to pay, but it's not the number one expense. A company can go bankrupt. A company will go bankrupt and, before they pay their debt, technically, if they have to. They will make sure that they have product to sell. They will make sure that they can pay for the delivery of the product before they will pay their debt if they don't have enough money to do both. So that might be why They are just forecasting a lot of debt. But ultimately, the message was, we're in uncertain times. We don't really know what's good right now. We're kind of figuring it out. There's no way. It's not their fault. There's no way to model that. There's no way to model that. So, banks are cyclical. When the economy turns down, the banks are going to be affected. That's like the nature of it. So the stock is still good. You're still buying the stock at a discount. But I was kind of hoping for positive news out of this earnings call. Didn't necessarily get that. But, it was kind of humbling just to be like, there's still economic damage that's going to come. And it makes me not want to be a buyer right now. Obviously we're off the all-time highs pretty significantly, about 15%. But we've rallied about 25% from the lows. Seems like we're at pretty good value right now. This is probably where we should just be. And the way I see it, we're just going to kind of flat line in a plus minus 5% range for a little bit until the economy turns back on, we all get back to work, things begin to recover, and then we'll get back on the long-term bull run. I think President Trump is a very good president. We have a very good economy fundamentally. People are going to get back into those jobs, hopefully. And if all those things happen, if the stars align, if the planets align, we'll be back on the long-term bull run. And I do think that's going to happen. I'm very confident in that. In the medium to long term. In the short term, we're going to be hit with all the economic damage we've been expecting that's been factored in. But we haven't seen a catalyst for a positive run. We've seen a catalyst for a little bit of a positive run. That's the, flattening of the curve, all that. And that rally should and has happened. But it has happened. At what point do we say, wait, hold on. We're getting a little too close to the all-time highs that we were at when everything was good, when no one was considering a pandemic. Now a pandemic is here. Economic damage has occurred. Lots of debt being issued. So the equities shouldn't be as valuable. So I hope you enjoyed the video, got some insights. If you didn't, ask me questions. I'll clarify some things. Kind of went on a ramble here. Growth stocks looking good. People, kind of want to swing money back into that. That's happened once before already. And then there was a pullback back in the growth stocks. So if you do see that, go hard on the growth stocks. They're called growth stocks for a reason. And there's going to be changes in the economy. We got to start thinking about that and modeling that. And I don't model that much, deciding what that's going to look like. And, stay away from things you're kind of more concerned about. So pick what you know, pick your spots, avoid ETFs, pick winners. And until tomorrow, peace.